Hello everyone, and welcome to this presentation of the three main components of a winning strategy. Welcome, my name is Stephen Primo. I'm the president and founder of Specialist Trading. And if you're not familiar with my website or what we do, we are first and foremost an educational company where I take all the, as you see here, insights, wisdom, as well as trading strategies that I've accumulated in my trading career, and then I teach and mentor all of my students. And these are also the current techniques that I'm using myself for my own personal trading. I started out my background roughly 38 years ago in trading. I started on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those I was a specialist for Donaldson Lufkin and Jenrette. So that's where we get the name Specialist Trading. If you're not familiar with what a specialist is or what a specialist does, because there aren't a lot of them left on the floors anymore, except for possibly New York. If you ever look at the pictures of the people screaming and yelling on the trading floor, making hand signals and lots of paper strewn all over the place, the specialists were those gentlemen behind those large booths, those wooden booths that generated sales or made orderly markets in anywhere from 30 to 50 stocks or issues. So I had my background in stocks. I traded through the crash of 1987 and the bull market that followed. But after that, I left roughly the floor in the 90s to manage money, to pursue my own trading, to trade other markets such as the currency pairs and futures as well. And 7 years ago, I teamed up with Pro Trader Strategies. They're our sister site. They market and promote all of my courses and all of my different techniques and strategies. And we put together Specialist Trading, where I am the educational portion of the company. So we teach and mentor all of my students the things that I've accumulated in my 38 years. Now today I'm going to teach you 3 great components that I really feel strongly will elevate your chances and your odds for being consistent in the market. I'm going to show you exactly how to implement them in today's presentation. But before we begin, as always, we are required to show you our disclaimer, so please take a moment to look at it. I'm going to show you a lot of performance results using these 3 main components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this. And as you're taking a moment to view it, I would also like to invite each and every one of you, if you haven't joined us already, to join us on Twitter. Follow us on Twitter. There's our handle, the abbreviation for Specialist Trading. You may want to write that down. That's at SPCLST. TRADG. Every day I post something different. Many times I'll post throughout the day, anywhere from daily financial wisdom to actual signals that are strategies generated. So lots of great quick information to find out about what we are currently doing. Now, if you'd like to get more detailed knowledge and information about what we're doing in Specialist Trading and Pro Trader Strategies, Pro Trader Strategies has put together a Facebook page for us. You can also like us on Facebook. You'll get a lot more detail, a lot more videos and things in which to read, and you get more information on what we do. Okay? So lots of ways to follow us and to find out more about what we do and what we teach. Now, as I stated, we are first and foremost an educational company. So as you see here, my goal is not to trade for you the way so many other educators or websites do. You know, what they'll do is just basically tell you what to buy and what to sell, and just pretty much leave you out of the picture and say, trust me, this is going to work out. I don't believe in that. Even though we provide our members with strategies and signals for those strategies, we are more about teaching you how to spot these on your own, because it's our belief that when you give your power away, when you just rely on an outside source, either it's some trading guru, someone on a chat room or a trading room, or even someone on TV telling you what to buy or sell, you're really creating a recipe for disaster. Because ultimately, I feel you'll join the ranks of that losing group, because it's been estimated anywhere from 80 to 85% of all traders ultimately fail. I feel it's because you're not taking the time to learn and to make your own trading decisions. So this is what we do at Specialist Trading. Even though we provide you with a backbone, with a benchmark for trading, we really work with you, teach and mentor you so that you can mold it to fit your needs, either trading aggressively or conservatively. Take this knowledge, take this education, so ultimately you can make your own trading decisions, decide whether you want to take the trade or not. Now today, I'm going to be teaching you 3 great components, and the beauty of these components is that you can actually add them to your current strategy. So if you don't want to become a member of Specialist Trading, that's okay. You can still use these components to elevate the odds of success for your current strategy, or even if you want, you can build a strategy based off of these 3 main components. So As I stated, we are an educational company. We're going to conduct today's presentation as a classroom. So before we begin, if you have any questions, this is a little bit different than most presentations. If you have a question, kindly wait till the end to ask. We're going to hold off on any questions. The presentation seems to flow a lot smoother if we just save the last 5 or 10 minutes for questions. So please, if you have a question, write it down and remember it, and we'll get to it. Also, I will answer just the most prominent question, is this being recorded? Yes, it is. We record all of our webinars. So if you're having technical difficulties or if you came in late, don't worry, you can go to ProTrader Strategies and request a link to this recording, okay? So once again, if you have a question, kindly just wait till the end of the presentation to ask. Now here's what you're going to learn today, because I have a lot of stuff to cover with you and I want to make sure you understand it. We're going to talk about component number 1, which is trading in sync with the market, all right? Everyone knows this, but for some reason, people still have difficulty trading in sync. So we're going to show you the simplest, most powerful way to be in sync with the market. Then we're going to go into component number 2. I'm going to share a price bar pattern. This is a tremendous edge. Whether you trade tick charts, 5-minute charts, hourly, daily, weekly, monthly, you should always look for this price bar pattern in your setup, whatever strategy you're trading. And then lastly, I'm going to show you an entry technique, because I've seen over the years that many times traders lose money, but not because they have the wrong idea, not because their strategy or system is not working. It's mainly because their entry technique is faulty. So I'm going to show you an entry technique that can really fine-tune your entries and give you that extra added chance for success. Okay, so these are the 3 main components we are going to be covering today. Once again, these are in just about 80 to 90% of all the things we teach today at Specialist Trading. Either we employ all 3 or we take 1 or 2 of these, but we always have 1 or 2 of these in place at all times in all of our methods and techniques. So these are extremely important. I'm not just giving you things that are for your own use and not ours. We employ, as I said, anywhere from 1 to all 3 of these in virtually just about everything we teach and trade at Specialist Trading. All right, so let's begin. Let's start out with component 1. And as I stated earlier, component 1 is just simply being in sync with the market. So you must trade in sync with the trend. Now, everyone knows this. This is Trading 101. You probably learned this the first day of trading before you ever started trading. But if everyone knows this, if this is just a standard elemental thing that you're supposed to be implementing, then why do the majority of all traders fail? It's my opinion the reason is because everyone has a different idea of what the trend is. I know some educators say the trend can only be found out by looking at the higher time frame, and then it must be in sync with the lower time frame, and vice versa. That's the way you find out what the trend is. Other traders will say, no, the trend is using specific indicators that I pretty much have designed or that I only know how to implement, and then we have to put them all together, and once everything matches up, once all the lines cross over, that's the trend, okay? Still, other presenters and educators will say, no, the trend is a pattern recognition type of thing. In other words, you have to look at a specific patterns, higher highs, higher lows to see an uptrend, or lower highs, lower lows to see a downtrend. This is why it's so confusing. Everyone has a different idea. Now, if we look at this generic chart here, I'm sure most of you would say, well, Steve, there is no trend in place here. It doesn't meet any of the criteria that I've been taught. And just off face value, you can see that, we're in a range. We're going down, then we're going back up, then we're going back down again. So I say there is no trend. All right. Well, this is the way most traders would feel. But if you're a member of Specialist Trading, if you're a student of mine, you know that there actually is a trend. The first thing we do is we apply the 50-period moving average. All right. And it wouldn't matter if this were a 5-minute chart we're looking at or a monthly chart. It does not matter. You should always apply a 50-period moving average and then ask yourselves, where is price or the majority of price in relation to that 50-period moving average? If price is above, as you see here in this example, well, then the overall trend, not the short-term trend, but the overall trend is up. And conversely, if the overall trend is up, the only rule we apply now is we're only going to be looking for buy setups. We will in no way short if price is above the 50-period moving average. That's a recipe for disaster, all right? So that's how we find the overall trend. Now, conversely, let's say if we see a chart like this, once again, someone would say, if you're not a member of mine, you'd say, well, Steve, there's no trend here. I'm going to sit on the sidelines and not do anything until I see a clear established trend or some of the indicators or things I look at to tell me, because we're just basically going lower than going higher in a range. Well, what's our rule? First thing we do is apply a 50-period moving average. We ask ourselves, where is price or the majority of price in relation to that? Obviously, the majority of price is below, so that tells us the overall trend is down. We don't care what the higher time frame is doing. I don't care what the indicators are saying. All we know is that the overall trend is down because price is below the 50. It's that simple. But here's the beauty of this. If the overall trend is down, we're only going to be sellers. I don't care what strategy you use. It can be one of yours. But if you apply this simple technique, I can really almost promise you that you will increase your odds for being consistent in the market because you're in sync with the overall trend. Okay? All right, so let's go to component number 2. Component number 2 states that we look for a bar that closes in the top 25% of its range. Obviously, this is if we're buyers. This is if we're in the overall uptrend. Now, what does this mean here? Well, if we look at these bars right here, once again, the same generic chart we were looking at before, we want to locate and identify bars that close in the top 25% of their range, or the top quarter. And when we say range, so many students that are new to my teaching say, well, Steve, are you talking about the open and close range, or are you talking about the theoretical range, or what are we, the average true range? Don't make trading more complicated than it has to be. All we want to do is look at a bar, okay? It doesn't matter if it's a candlestick, an open, high, low, close, or if it's a range bar. It doesn't matter what type of bar you're looking at. Whatever the extreme high was and the extreme low was, you simply divide it by 4 separate but equal parts. We want to be closing in the top 25%. Now, all of these bars that are colored green closed in the top 25%. That's it. That's all we're looking for. And the reason why we're looking for that is because the market has a tremendous edge it's signaling to us. It's telling us that most likely we are going to continue in that same direction for the next 3 to 5 bars. And once again, this could be a 5-minute bar in front of us. It could be a yearly bar in front of us. Absolutely doesn't matter. Now, if we're on the overall sell side, in other words, the overall trend is down, well, now we're just going to do the reverse. We're going to look for a bar that closes in the bottom 25% of its range. So if we look at that same generic chart we were looking at earlier that is below the 50-period moving average, we find that this bar closed in the bottom 25%. All right. Once again, we just take the high, and you could say, well, the high of the wick and the low of the wick, that's fine. Or if you're looking at an open, high, low, close bar, you can just say the high of the range, the low of the range. It does not matter. Just whatever the extreme high was and the extreme low was, take that range, divide by 4, and now we want to see that we closed in the bottom quarter of the range. Okay? Once again, this is a tremendous clue coming from the market, not coming from some guy in a trading room, not coming from somebody on TV, but coming from the market, telling you that most likely the next 3 to 5 bars are going to continue in that direction. What a great edge to have. Something coming from what you're trading, not coming from some outside source that you really don't know if it's any more valid than, than something you just picked up on the street. All right, now we have the first 2 components in place. Now component number 3, which is our entry technique. We're going to enter upon the confirmation of trend. So what does that mean? I thought we already found the overall trend. Well, let's say we're in an overall uptrend and we're looking for buy setups. Here's our confirmation method. We're going to buy, but only on the next bar. In other words, we're not going to stick around for 5 or 10 bars to wait for this to happen. This has to happen on the next bar. But we want to see price trade 1 to 5 ticks. It's up to you. Use your own discretion. But it must trade 1 to 5 ticks above the bar that closes in its top 25% of its range. So that bar, those bars that were green, we want to see that we trade above them, okay, on the very next bar. Now, we don't need to close above them. We just need to trade intra-bar. That's all we need. So it wouldn't matter if it traded there and then closed lower. It makes absolutely no difference. Just intra-bar, we want to see that we traded 1 to 5 ticks above those bars that closed in the top 25% of their range. All right, so if we look at the example, once again, these are the 3 bars that are above the 50-period moving average, closing in the top quarter of their range. As we see here, the very first example, well, we would buy here if we traded there on the next bar, but as you can see, we never did. So there was no setup. if we look at the next bar, well, here's where we're going to buy. And as you can see, we did trade there. We traded intra-bar and closed lower. Does not make a difference. We don't care where it closes. All we care is that it traded 1 to 5 ticks above, and that's our entry point. So you would have entered, and as you can see, for the next roughly 4 or 5 bars, you went higher. Not a large gain, but at least you had some type of indication of what you thought the market was doing. Now, if we look at the last example here, well, we want to buy if we trade 1 to 5 ticks above, but it must be on the very next bar. So as you can see, we traded above there, but closed lower. Once again, don't get caught up on where the close is. All you care about is if you trade there. So we would have entered, and this time it had a lot more intensity to the upside. But you see how now you've put the odds in your favor by using these 3 very simple but powerful components. We are above the 50 period, so the overall trend is up. We are in no way going to try and short the market. We're going to be in sync with the overall trend. All right? Now we want to get some type of edge as to where to enter, so we're looking for bars that close in the top quarter of their range. And then lastly, we don't just simply buy at the market the way so many traders do, because sometimes, I'm not going to sit here and promise you that it works 100% of the time. It doesn't. Sometimes if you would have purchased at the market, it would go straight down after you buy it. We've all seen that happen before. So we want a little bit more confirmation. We want to see it trade above those bars that closed in the top quarter of their range. Now, if we're going short, we just do the opposite. Instead of buying, we're going to sell, but on the next bar only, if price trades 1 to 5 ticks below the bar that closed in the bottom quarter of its range. So the exact same concept, but now we're just doing the opposite. So as you can see here, we are below the 50. Here's the bar that closed in its bottom 25%. But we're not going to sell at the market because we know that sometimes you can sell and it will go right back up. So we have to wait for confirmation that it trades below its low. And it must trade there, not close there, but it must trade there on the very next bar because we're trying to catch momentum. Okay? So as we see here, we did trade there. Intra-bar traded there, but then closed higher. Doesn't matter. Don't get hooked and don't get caught up on the close again. We're not concerned in terms of where we enter using this technique. We're just concerned with, or I should say, where it closes using this technique. We're just concerned that it traded below. So now we've entered short, and look what happened. Okay? Once again, all this information was given to us, not from an outside source in a chat room, not from some guy in a webinar telling you what to buy, what to sell, not from someone on TV. It was all given to you from looking at the chart in front of you. Remember, as I stated in the opening segment of this presentation, we feel that most traders fail, upwards of 85%, because you're relying on an outside source to tell you what to do. We give you the basic format, and then we instruct you on how to best use it that meet your needs, but then we say, go out and make your own decisions. We're in no way going to tell you how or what to trade. We don't teach or trade systems at Specialist Trading. We teach strategies. Strategies are just basically rule-based, but they allow about 25 to 30% discretion. All right, so we take these 3 components, and as I told you, we employ these in just about 80 to 90% of all the things we trade at Specialist Trading, anywhere from all 3 to maybe just 1 or so of them. But we've used all 3 in constructing one of our most consistent strategies to date, and that is strategy number 4. Okay, let me just share with you some of the highlights about this particular strategy. It's for all traders, from beginners to advanced. So it doesn't matter if you've been trading 30 years or 30 minutes. Everyone gets the same basic format. We have people that have just started trading, that are new to trading, that started with strategy number 4. We also have traders who are hedge fund managers that trade strategy number 4. So don't worry if you feel you don't have enough experience, or don't worry if you feel you have too much experience. It's just a basic format strategy that can, that can be used by anyone. Now, it's basically designed for traders looking to catch quick momentum moves. That was really the initial format of it, to get in and out quickly. But once you become a member of the course, the strategy number 4 course, we teach you how to stay in longer if you'd like. We show you many different techniques that if you'd like to capture some large gains, you can do that. But its basic character is to get in and out quickly with a quick gain and get out. Now its intensity level from 1 to 3, if 1 was the most intense of all strategies you've ever seen where you had to be glued in front of your computer, and 3 was the least intense where it was so relaxing you could just enter an order and walk away, it falls right in the middle. It's a very moderate strategy to learn. It only uses one indicator. That's how simple it is. All right. In fact, you already know what that indicator is. It's the 50-period moving average because it's telling us what side of the market to be on. So you already have basically 3 of the rules to this 6-rule strategy. This strategy works in any time frame, any direction, and any market. So that's the beauty of it. If you like to trade the futures, but you also like to trade stocks, well, guess what? You can use the same format for all of those different markets, different time frames, different directions. You can use it on currency pairs. You can use it on commodities. It absolutely doesn't matter. That's how powerful this and consistent this technique is. Now, once you become a member of the course, we provide you with automatic buy and sell indicators where they tell you when a trade setup is being generated. But please, as I stated, we are an educational company. We provide this only for educational purposes because we want you to check your work. If you think that a strategy 4 signal is being generated in Apple, but a up arrow has not been generated, well then you know something's wrong. See, this is a good way to monitor if you're in line with the rules. But once you fully understand, you've worked with me, you've been under my mentorship, and you understand what to look for, please, you will not even have to rely on these buy and sell arrows anymore. You can just automatically spot when a signal is ready to be generated. Our edge here at Specialist Trading is consistency. We are in no way trying to promise you that you will make millions of dollars or you will generate so many percentage points a month or a year, or that you will make so much money. Those are all statistical facts. We don't believe in statistics. Why? Because we become a part of the process. Remember, I want you to make your own decisions, and everyone makes different decisions. Some traders can trade more aggressively and get in and out quickly. Others can trade more conservatively and be in for the long haul. Other traders like to intraday trade currency pairs. Others like to trade for the IRA stocks. So there's no way to monitor each and every different style. That's why we're not a systematic company. We do not keep statistics, win-loss ratios, worst-case drawdowns, because everyone trades them differently. And once again, this goes back to our philosophy that you should not be taking your cues from an outside source. I don't care if it's a system or someone on TV. You should be making your own trading decisions, where you get in, where you get out, where you place your stop. We just give you the standard formats that have a high level of consistency to them. So that's our edge. We're teaching you how to be consistent. It's up to you to decide how to implement that. All right, so let's look at some strategy number 4 examples. And once again, you'll see in these examples how they implement all of the 3 components I just revealed to you. All right, so we really practice what we preach here. I've just given you 3 of the rules to strategy number 4. I can't give you all the rules because that wouldn't be fair to the people that have spent good money on becoming course members. But trust me, you've taken just the core, the real meat out of this strategy, and you can construct your own strategy, or you can apply them to your current strategy that you're trading. All right, let's start off by looking at some stocks. The first example was in Tesla, and we realize this is an expensive stock that not everyone is going to be able to afford to buy Tesla stock. This is mainly for example purposes, but we also have a good many members who like to trade options. And so once a signal is generated, rather than purchase the stock, they will just simply purchase the option, the long call or the long put. Having said that, a signal was generated here. This was just about 3 weeks ago in June. We're kind of cut off a little bit here, but this is the 50-period moving average, so we're above the 50, so the overall trend is up. We have the bar here that closed in the top 25%, and we're going to buy if we just trade above it. All right, so we automatically generated a buy signal using strategy number 4. The strategy generated a buy signal. We didn't, but the strategy did. So you want to buy if we trade above on the next bar. And as you can see, we traded above. So you would have entered, had you taken this signal, roughly around 251, 252. And 3 to 4 weeks later, the stock is up 30 points based off that signal, strategy number 4 generated. How about First Solar, FSLR? All right, we ask ourselves, where is price in relation to the 50-period moving average? Price is below. So does this mean we're going to be looking for buy signals? No, it means we're only looking for sell signals. Why? Because the overall trend is down. And lo and behold, here is a bar that closed in its bottom quarter of its range. So the strategy generated a sell signal, but we can only go short if we trade just below it on the next bar, and it did. So the strategy generated a valid signal to go short. You would have entered roughly around the 52 level, and in 3 weeks, it's down to roughly 45. Okay, 7 points in about 3 weeks. This was just about 3 weeks ago. Now we can apply this to the E-mini. Let's say you say, Steve, I don't really trade stocks. I like to trade the E-mini. Okay, well, let's look at it, first of all, a daily chart, just to show you how this concept works, looking at the futures and looking at the indices. Now, we originally were above the 50-period moving average. We had a couple of days where we closed below it, but this is a more advanced way, and this is what, once again, that is taught in the courses and which I teach in my mentoring with you as my student. But please remember that if we're going to be entering a trade, and in this case a long setup, even if price a couple of times or maybe 10, 20 times is below the 50 period, you can still enter a buy signal if your entry is above the 50 period moving average. So even if all of these bars were below the 50, but your entry point was above, that's still a valid trade. A little bit more advanced, but it's still valid. So as you can see, we closed in the top 25%, we closed above the 50, and our entry would be right here, which is above the 50. So this is a valid setup to go long. So as we see here, we can only go long on the next day according to the signal rules, and you would have entered on the next day. Now we gapped up around 10 or so points, so you would have the decision. Once again, these are not systems. It's up to you to decide whether you wanted to take this trade or not. That's why we say we do not keep statistical records, because everyone would trade this differently. Some conservative traders would say, no, I'm not going to take that trade. It's already up 10 or 20 points. Or another aggressive trader would say, oh no, I'm definitely taking that trade. That proves to me that it's going higher. It's up to you. Let's say you had taken that signal and purchased it. Well, guess what? You've got about a 20-point gain at the end. You could have exited there if you wanted to. Once again, your discretion. Or you could have held on and captured another 20 points in the following week. This is why we say you make the decisions. We're just furnishing you with high probability edges, high probability techniques. How about a 60-minute chart of the E-mini now? Now we realize that most people can't trade the E-mini on a daily basis, so let's go down to a smaller time frame. This was on the 25th, just a couple of weeks ago. Price once again was above the 50 period, but then we had a series of closes below the 50. So this is telling us that the overall trend is down. So we're looking for sell setups. Now we have a bar here that closes in its bottom quarter of its range. The strategy generated a sell signal right here, but we can only go short on this hourly chart if we trade below this bar. The same rules will apply if we're looking at a 60-minute time frame or a daily or a monthly time frame. We can only enter on the next bar if we're trading the standard format. Well, the next bar just trades a little below there, but then closes higher. Do we care? No, we don't. All we cared is that we traded below there. That was our entry point. So you could have gotten short roughly around 2100 on the S&P if you wanted to take the signal that was generated. And as you can see here, roughly about, I would say about 50 points of the downside was generated in the next 2 days. This is where that slide in the market started. Now I want to show you some more in different markets. Let's look at the Forex markets, okay? Just for some of you people that say, well, I trade the Forex currency pairs on a daily time frame. Okay, let's look at an older chart of the euro dollar. This is a common question that most students ask. They say, well, Steve, what happens if we're above and then we cross back below the 50-period moving average? Well, you just use the same rules. If you're above the 50, you only look for buy setups. If price closes below the 50 and you get a setup and your entry is below the 50, well, then you look for valid sell setups. So if we see what the strategy generated here using our add-on, we had 2 buy signals that generated positive results, and then followed by 3 sell signals where the strategy generated positive results. Now once again, there are a number of ways to trade this. There are aggressive ways, there are conservative ways. We teach all of this in the course. All right, I'm not going to go into detail right now because sometimes people will say, well, do I have to follow the standard format? No, once again, these are not systems. As long as you keep the basic components in place, or at least a few of them in place, you can alter things and mix and match. Now, from time to time, you will see this. I'm not going to sit here and tell you that every trade works out. Every trade is a winner. As you can see here in QEP, this was coming into April. we had a sell signal that the strategy generated, automatically generated. So let's say you just purchased this and you say, okay, I'm going to take this trade. I'm so excited. Here's a valid sell signal. I noticed it. I saw it. And at the same time, the add-on generated an automatic down arrow for me. So I'm going to take this. So let's see, it's your first signal that you take. And you know what? It doesn't really do anything. It trades below there. So you enter short. But then actually, if you use the most conservative stop placement, you're stopped out. So you're probably thinking to yourself, boy, this stuff doesn't work. I was so excited to use this, and it doesn't work at all. This guy, Steve Primo, is just like all the rest. None of this stuff works. But you continue to monitor it, and you see that, lo and behold, a week later, once you've been stopped out, a buy signal is generated. And you don't take that one because you said, boy, I lost some money on my first trade. I'm going to sit and watch for a while. So you stay out of the second trade, and, well, guess what? That one works really well. In fact, you could have made back all your losses and made more money, but had you known to take the second one. So is there a way we can filter out, not all because it's not possible to say that we can do that, but what if we could filter out a large part of the losing trades or the trades that weren't that consistent and only get involved in the ones that did have a higher probability for success, such as the second signal here? Well, this lends us to ask the question, how can we increase our odds for success? Well, we do by combining the PET-D, which is our proprietary short-term trend identifier, with strategy number 4. All right, and we label this our dynamic duo. The reason why we label it our dynamic duo is because we've had so many of our students and members tell us of their increased consistency by using these two in conjunction. Let me show you how this works. The PET-D is simply a color bar tool. We furnish you with the add-on that you upload onto your charting platform, and it automatically colors the bars either green or red. Now, if you see a series of green bars, it's telling you that the short-term uptrend or short-term trend is up. Now, conversely, if you see a series of red bars, it's telling you the short-term trend is down. Remember, we taught you how to find the overall trend. That's the 50-period moving average. But within that overall trend, sometimes you'll get these peaks and valleys. So it's really designed to catch those short-term trends. But how do we use it with strategy number 4? How does it increase our odds for success when we apply it with strategy number 4? Well, here's the way we use it. We're only going to trade strategy number 4 buy signals that are colored green. So in other words, we don't care if all the bars before the setup bar were red. As long as that setup bar is green, it's telling us that we have a high probability for success on this particular trade. Now conversely, we're only going to trade strategy number 4 sell signals that are colored red. Once again, if the majority of bars prior to that sell setup were green, but strategy number 4 generates a sell signal and it's colored red, well, it's giving us the confidence to take the trade because it has a higher level of consistency. So if we go back to that initial setup we were looking at, remember all sell orders must be colored red, all buy setups should be colored green. Now we add the PET-D, which automatically changes the colors either green or red on your bars. Once we've done that, we see that the original sell was colored green. This is telling us that most likely it's not going to work out because the uptrend, the short-term uptrend is still up. So we don't want to short if the short-term trend is up. So we would have bypassed and not taken that trade, and guess what? You would have most likely been stopped out. But the second setup, which is a buy signal, was colored green, telling us that you want to buy because you're in sync with the overall trend as well as the short-term trend. And this one worked out fine. So this is such a tremendous edge to have in your favor because strategy number 4 in and of itself is already a very consistent strategy, our most consistent strategy to date. But when you couple it with the PET-D to confirm whether you should take the trade or not, well, you're automatically ramping up your chances for success. So if we look at another example here in ICE, we see here that we had a buy signal, and you would have had to have been very quick on this because it was only really up for 1 or 2 days and then quickly went down and most likely would have stopped you out. And then you were met with a sell signal. So which one should you have taken? Well, we simply add the PET-D. Remember, buy signals need to be colored green. Sell signals need to be colored red. Well, the buy signal was colored red, telling you that the short-term trend was still down and that most likely you shouldn't take this trade. So you would have bypassed this and most likely missed a losing transaction. But now you're met with a sell signal, even though this is more advanced because we're just barely closing below the 50. It's okay. The short-term trend is down. So it's giving you the confidence to take this, and look what happened. So let's look at some more recent dynamic duo examples and how they can really increase your odds for success. Let's look at stocks once again. Here's an example in eBay. This was just coming into June here. We are above the 50-period moving average, and just by itself, strategy number 4 generated a buy signal. Remember, strategy number 4 just by itself is a very consistent strategy, but we want to be even more confident. So how can we be confident enough to take this signal? Well, we add the PET D, and a buy signal must be colored green, and it is. All right, so it gives us the confidence to take it. We could have entered the trade roughly around 59 or 60, and the stock goes up roughly 4 points in the next week or so. How about WU? Okay, well, this one was a little bit more tricky. It's going above and below the 50 period, but on this particular day here, which was just a couple of weeks ago, the strategy generated a sell signal. All right, so we're a little bit weary to take this because we think about, well, how do we know it's not just going to bounce back up above the 50 period again? How do I know I want to take this sell signal? Excuse me. We add the PET D to get that assurance. Remember, the sell signals should be colored red, and guess what? It is. In fact, all of the bars have been colored red. Even when we were above the 50, the PET D colored the bars red. So this gives you a lot of confidence to take this trade, and look what happened. All right, we didn't have any idea that a week or so later the stock was going to gap down roughly about 2 points or so. But you could have gained roughly about 10% or so on this particular trade just in a week or so. How about Lilly? We're above the 50-period moving average. Strategy number 4 generated a buy signal. All right, but we want to have that assurance that it's a valid buy signal using the dynamic duo. So we add the PET D, and all of the colors have been green going all the way back the last 3 or 4 weeks. So we have no worries about taking this trade. Let's go long. We could have gone long roughly about 79. And the stock went up roughly 7 or 8 points in the next 3 or 4 days. This was just about a month ago. QRVO is above the 50-period moving average. Once again, we have 2 signals. The first one was kind of moderate. I mean, you could have actually made money, but you would have had to been very quick, make a few points here, and in 2 or 3 days, gotten in and out. But if you wanted to really try and look for those nice trending moves, you have to verify it with the PET D. So as you can see here, the buy signals should both be colored green. Well, the first buy signal was colored red. So if you wanted to be a little bit more conservative, you would not have taken this trade, even though it was a winner for 2 or 3 days. But the second signal was colored green. I would have personally taken this one, and instead of just sitting on the sidelines with the first, we would have entered roughly around 82.5 and seen the stock go up to roughly 88, 88.5 in the next week or so. A much nicer, easier trend to have rather than a choppy back and forth market. How about APC? Now, many times you'll see strategy number 4 setups which may take longer to develop than others. That's just the current market conditions. There's not a lot of volatility, and even though the strategy will generate a valid buy or sell signal, you may have to wait a little bit longer. A lot of traders don't like this. They want to get in and out. But how can we know whether to stay in the trade or just get out and say, you know what, it's not working, I'm going to get out with a small loss? Well, we had 2 signals generated in the beginning of June here to go short APC, and nothing much was happening. If we had added the PET D to both of these signals, we would have seen that they were confirmed by the color bar tool. So this would have given you the assurance to stay in the trade. Roughly you're short around 84, and finally when volatility kicked that back in, the stock dropped down to roughly the 80, 79, 80 level. So sometimes it takes a little bit longer. That's why the PET D can really help you to stay with a trade. Now, this is a great example of sometimes how the best trades are the ones you never take, and this is where the dynamic duo really comes into play. As you see here in CVC, this is an older chart, but we had 3 examples to go short. Now, just using strategy number 4, you would have seen that the strategy generated 3 sell signals. All right, they were all valid. They were all below the 50-period moving average. So most likely you would have said, well, you know, why didn't any of these work? They really were kind of whipsaw. You would have looked pretty good, or maybe they would have stopped you out with a loss. So how could we have known to take these? Well, you see the PET D colored them all green. So you wouldn't have taken any of these. Why? Because they're out of sync with the short-term trend. If you're selling, you want to see them colored red. And as you can see later on, the PET D would have kept you out of a lot of trouble because it was already signaling that the short-term trend was up. Even though we were below the 50-period moving average, that's the overall trend. But sometimes it's a little slower, so you need to have the short-term trend tell you what's going on within the short-term intervals. Now, this can be applied to any market, any time frame, the dynamic duo. We see here an older chart of crude oil. When crude oil was really falling out of bed at the end of last year, we had 3 strategy number 4 sell signals that were generated just by using strategy number 4. And had you just had strategy number 4, you would have had 3 winning trades to the downside, shorting crude oil. But if you want to be more conservative, you just want a little bit more assurance, you simply add the PET-D as your dynamic duo, and all 3 of them were confirmed. So you wouldn't have had to worry about the way so many people were calling for crude oil to bottom out. You would have known that as long as the bars are red, it's going lower. Why? Because the overall and the short-term trend are in sync with each other. Now that's in crude oil. We can still apply this to wheat. We can apply this to commodities. We have a number of commodity traders as specialist trading. Now here's a signal that was generated just a few weeks ago in wheat. As we see, we're oscillating above and below the 50-period moving average. In fact, all of the bars are red as colored by the PET-D, so it's telling us that the short-term trend is really down. But on the 22nd of June, a buy signal was generated and it was colored green. So that would have given you the assurance that most likely wheat is going to have a nice little rally. And lo and behold, it did. This was coming into just this past week. Now that was in wheat. You can also use this on weekly charts of coffee. All right, coffee has been really going much lower, much lower. And we look at a weekly chart going all the way back to November of last year. We have 2 signals generated once again. The first was a buy signal. The second was a sell signal. Now the buy signal met all of the rule requirements just using strategy number 4, but it didn't work out, as you can see. You would have been stopped out with a loss. So how would we have known to take the second signal? Well, we simply add the PET-D. It doesn't matter if we're looking at stocks, futures, or commodities. In this case, a weekly chart of coffee. We add the PET-D and we see here that the very first signal should have been colored green because it was a buy, but it was colored red, so you would not have gone long coffee on a weekly basis. Now, when the strategy generated a sell signal at the beginning of the year, well, you would have had the confidence to take it because the PET-D colored it red, and look what happened. As we've seen here, coming into July, coffee has continued and continues to go much lower. Well, it's funny, no one told us about the price of coffee at the beginning of the year. Everything was told to us just by looking at the chart. In fact, I personally do not trade commodities. So I had no idea what coffee was going to do because I don't really watch it. But just looking at a weekly chart, well, I would have said, well, the overall trend is down since the beginning of the year because we're below the 50-period moving average. And the short-term trend is down because all of the bars have been red going back to November of 2014. All right, we can still apply this to the futures. Let's look at some E-mini examples here. Here's a weekly chart, and we realize that most people do not trade weekly E-mini futures, but I just want to show you the consistency in this. Here's a weekly chart going back roughly 2 or 3 years ago, starting at 2013 all the way to the beginning of 2015. These are all buy signals that were generated by strategy number 4. Most of them were profitable, but if we wanted to just be sure, we add the PET-D, and they were all confirmed. And you can see the market continue to go higher and higher. Now, once again, we realize you don't trade weekly futures. Not everyone does. So let's go to a 5-minute time frame. This was on the 29th. This was just last week on the 29th on a 5-minute chart. Okay, the entire day. Where was price in relation to the 50-period moving average? Price was below the entire day. In fact, you knew in the first 5 or 10 minutes that you should only be looking to go short. The only people that lost money on this day were people trying to pick a bottom. Remember, if price is below, I don't care if it's a 5-minute chart or a monthly chart, we do not buy. So we're only looking for sell setups. As we can see here, these were all valid sell signals generated that day by strategy number 4, and they were all confirmed by the PET-D. So you think it could have helped you intraday trade? The dynamic duo could have helped you on that particular day. Now that was on the 29th last week. How about yesterday? Just to show you that we're not cherry picking, we're not picking things that happened a week or a month ago. How about yesterday? All right, let's look at a 10-minute chart of the E-mini S&P. Now this was the 6th coming into yesterday, the 7th. Here was the action of the last roughly hour or two where the market had a nice little rally towards the end of the day. All right, now the very first 10-minute bar was generated right here, as you can see on the 7th, which was yesterday. Even though 2 or 3 of the bars from the previous day had closed above the 50, where did we close? We closed below the 50, and we closed in the bottom 25%, all right? Component 1 and 2 that I shared with you. This means that we will go short, but only on the next 10-minute bar we must trade below there. Now, I'm sure if you were just new to this technique, you would have said, well, okay, I understand the concepts, I understand the components and the rules, I've studied, but I'm a little bit gun shy here. After all, there has been a lot of volatility in the markets lately. What if it goes straight up? What if I get stopped out? Well, you need a little bit more confidence, so you add the dynamic duo, the PET-D accompanied with strategy number 4. And all sell signals need to be colored red. As we see here, the sell signal was colored red. So if you don't have the confidence to take the trade, this was giving you added confidence to go short. So all you have to do is go short on the next 10-minute bar, and only if we trade intrabar 1 or 2 ticks below. Well, you see it did trade 1 or 2 ticks below, and look what happened in the very first hour of the day. You would have been able to, I'm not saying you would have stayed in the trade this long, but if you wanted to, you had the opportunity to stay in the trade for an hour and gain roughly 20 points or $1,000 per contract. So you see, these concepts are just not nebulous things that we throw out at you. They happen all the time. This happened yesterday in the very first hour of the day. We can also apply this to the Forex markets, okay? Here's a monthly chart of the Canadian dollar. Prices above the 50. Going back to last July, we see here on a monthly time frame, we generated a buy signal. It was confirmed by the PET-D, and look at what the Canadian dollar did in the months to follow. This is literally thousands and thousands of dollars profit per contract, per lot you're trading. But you can also go down to a smaller time frame. A lot of currency pair traders like to trade 4-hour charts or 240 minutes. What we see here in this chart in the Australian dollar, we have 2 buy signals that are confirmed. It's exact same rules, the exact same components we were talking about at the beginning that I taught you. Same things, and at the same time, they're both confirmed by the PET-D. All right, so getting ready to go to the question and answer, let's just recap, okay? We taught you how to be in sync with the trend, how to use the 50-period moving average. It is the simplest but most powerful tool that I've ever actually learned. In fact, I often tell my beginning students, if I were stranded on a desert island, I could only use one technique or one tool to trade with, it would be the 50-period moving average. It would, because that literally has helped me so much in my 38 years of trading. It gets me on the right side of the market, all right? So that's your tool for the overall trend. Now we want to look for a bar, if we're going long, that closes in its top 25%. If we're going short and we're below the 50 period, that closes in the bottom 25%. Why? Because it's not an outside source. It's not someone in a chat room. It's not some educator. It's not someone on TV. It's the market screaming that it's most likely going to continue in that same direction for the next 3 to 5 bars. I can't think of a better edge that comes directly from the market. So once you have these 2 edges in place, then you want to fine-tune it with an entry technique. And that's our confirmation method, where you simply don't buy at the market or place a limit lower, but you buy once price trades 1 or 2 or 5 ticks above. It's up to you. If you're going long, 1 to 5 ticks above the previous bar, the bar that closed in its 25% range. Or if you're going short, it must trade 1 to 5 ticks below the bar that closed in the bottom, and you will increase your odds for success. So we showed you these 3 main components. Then we coupled them with the PET-D and strategy number 4, which created our dynamic duo, probably our most popular and consistent package at Specialist Trading to date. We've had so many people write testimonials and write me telling me, Steve, for the first time, I'm a consistent trader in over 20 years using this package. So thank you so much. Now, ask yourself in closing here, ask yourself honestly, do you think any one of these edges that I just shared with you, any one of these 3 components could have helped your trading this past year? I can almost guarantee, even though I can't guarantee anything, I can almost say that even if you just use the 50-period moving average, that could have helped you tremendously this past year. Go back and look at your last 20 or 30 trades. In fact, apply the 50-period moving average, whether you trade tick charts or whether you trade monthly bars, and see if that couldn't have increased your odds for success. Now, I want to take just a moment to talk about today's special attendee discount. Here's what we're offering you all for attending today. We're going to put together our dynamic duo special. This is strategy number 4, which I just shared with you, along with the PET-D tool. You're going to get instant course access, detailed instruction. you're going to get the add-ons that automatically generate the buy and sell indicators, as well as the color bar tool for the PET-D. Now, this comes with our Dynamic Duo special included. You will get email alerts. After you've learned the rules for some time, we furnish you with email alerts. We don't just want you to blindly take these. These, once again, are for educational purposes. But here's an example of what happened just last week. On the 2nd, we generated buy signals, and pay close attention to this one, TSO. All right, we tell you what strategy to look for and what the signal is, buy or sell. Well, this was a strategy number 4, buy signal in TSO. Now, as you can see here, this is the information coming in that day. Now, once again, we provide this for you just for educational purposes, because you should be able to spot these on your own after a few weeks or even a few months of studying. But you would have seen the email alert that night telling you that a buy signal has been generated in TSO to get ready to go long if we trade just above right here. Now, someone who may be a new student would have said, well, you know, I'm a little bit nervous about this. First of all, the market has been going much lower. It's got a lot of negative overtones. There's a lot of bad things happening in the world with Greece, happening all over the place, and the market is really getting ready to fall out of bed. And how can I take a buy signal, you know? And plus, if I look at this chart, the majority of the bars closed below the overall trend. They were in the overall downtrend. So I know it meets all the rules, but it is a little scary. Well, if you were a PET-D member, all you would have had to do is apply the PET-D. Excuse me here while I'm losing my voice. And the PET-D should give you the assurance as to which direction it's most likely going to be headed. So remember, we want to see buy signals colored green, not red. And once we apply the PET-D, we see here that the majority of this time, these bars, even though they're below the 50, have been colored green. We only had a couple that were red. And the buy signal, which is the most important bar, was colored green, giving us the assurance that most likely this setup may work out. So it would have given you the confidence to go long roughly around the 89 level. And look what happened. The stock gained 4 points in 3 days. Now, this is just coming into roughly yesterday, I believe. I took the snapshot. If you recall, the market has been falling out of bed, down 100, 200 points a day. But the strategy, along with the PET-D, correctly identified a setup that had a high probability for success to the upside. So this is why we say we don't trade systems. We don't just follow blindly rules without knowing why. We have input, and we want you to make your final decision. You're not required to take this, but we're giving you the assurance and the edges to give you the confidence to take the trades should you want to. So this is the attendee special we have for you today. We're giving you the PET-D with strategy number 4. This makes up our Dynamic Duo instant course access. You get all the entries, exits, and stops, the remainder of the rules to strategy number 4. Plus you get PET-D with the add-on to change the colors. And along with the PET-D course, we teach you 4 different trading techniques. So lots of great information included. Now, if you go to the Pro Trader Strategies site, my sister site, they advertise the Dynamic Duo for close to $3,200. That's how popular and that's how powerful it is. But for all the attendees today, we're dropping the price. We're slashing it down to $24.95. And the best thing is we have payment plans. So even if you can't meet that requirement of $24.95 in one lump sum, you can talk to the people at Pro Trader Strategies and put together some type of payment plan, and then we'll get you up and running. Okay, so all you have to come in is with some type of deposit, and you can be getting instant course access, not only with strategy number 4, but with the PET-D for $24.95. Once again, these are yours for life. You get lifetime correspondence with me as your mentor, and these are not things that are going to be upgraded or changed, or there must be additional fees each and every year. No, I mean, we haven't upgraded or changed anything since we started using these years ago. The only reason they're new is because we've combined them into one course that works together. But when we sold them individually, nothing has changed. They're basically the same rules, so don't worry about added costs. $24.95 is yours now for a lifetime. Plus, you are a student of mine for a lifetime. So here's the information you need. Pro Trader Strategies markets and promotes all of my courses and the Dynamic Duo package. You can email them at trading@protraderstrategies.com. You can call them directly at area code 310-598-6677 and construct that payment plan with them, because they can do that with you over the phone. You just simply negotiate some type of deposit and they'll work with you on that. And then lastly, if you do want to take advantage of that $24.95 lump sum and discount, you can go to the link below. Now that's not a live link, So you may want to copy and paste that onto your browser, but if you look on the chat box on your GoToWebinar column on the right, you'll see that ProTrader Strategies has posted that. So you can click that link on, or you can call them directly and they will be able to take care of you, okay? I'm going to leave this information up so you can copy it down, or you can copy and paste it onto your browser. And then I'm going to open up the question and answer box. And I want to thank you all for holding off. We have about a good 10 minutes for any questions, should you have them. Once again, if we were to look and see what this is advertised on the ProTrader Strategy site, it is listed for roughly $3,200. And who knows? I mean, there may even be an increase in that price in the following months coming in towards the latter part of the year, because most of our traders using this are so successful. But for right now, you can get it for $24.95 with payment plans. So we don't have payment plans for everything that we promote and have access to. So you may want to take advantage of that strongly. Last chance for any questions. I know we started a little bit early today, but we wanted to just take advantage of this to make sure that each and every one of you were able to see it. Let's see, first question here. Do you offer a trial or refund if the system doesn't work for you? Hi, Denise. No, you know what? I should say our expertise and 38 years experience really comes with so much jam-packed information, as well as my mentorship, that we've decided not to give out full-fledged cashback refund. But what we do is, if you're not satisfied with any product at Specialist Trading, ProTrader Strategies will give you 30 days, I believe, to simply exchange it for any other product that we have. I mean, once again, it's only because you can't unlearn the information. These are courses. And so many students of ours in the past have taken the information and either sold it or given it away for free. And so we don't want a lot of our people doing that, because you have everything. You have 38 years of experience at your fingertips now. And all the things that I've accumulated that took me years to accumulate and to learn, you now have in just a matter of days. So we don't give full money refunds, but after 30 days, if it's just not working for you, if it's not your cup of tea, we have a number of products for different markets, different time frames, different styles of trading that you can exchange it for, okay? Let's see here. Next question says, Steve, I use Sierra charts. Can I apply the dynamic duo with Sierra? And can I code the entries and exits for auto trading? Fred, that's a great question. Yes, you can use it on Sierra charts, but we're not involved in any type of auto trading, because once again, that goes against our philosophy. Now, we're not saying that you can't do that, but we don't get involved in auto trading because, once again, you're relying on something to make your trading for you, and you're turning this into a systematic approach. We want you to be able to take the insight that I teach you as my student and decide for yourself if you want to take the trade or not. And these are things that cannot be coded automatically. This is just an insight you get through experience and through paper trading for a while. So having said that, we would never dissuade you from coding or from using automatic trading, but we just don't get involved in that arena, okay? But going back to the first part of your question, yes, you can use it on Sierra charts. It works perfectly there. Roger is saying, what is the difference between ProTrader Strategies and Specialist Trading membership? Well, as I stated in the beginning, we're basically, we've teamed up together. ProTrader Strategies handles all of the marketing and the promotion and the selling of my courses and strategies. They handle all the pricing, they handle technical support, they handle all of those type of issues. Anything related to teaching, trading, mentoring of the strategies is what I am solely involved in. I'm not involved in pricing. I'm not involved in any type of technical support. That basically comes from their end, okay? So they're the nuts and bolts of the company, and I'm just strictly involved with education and teaching you. Sometimes I think they have a harder job than I do, because the specialist trading courses are laid out so simply and so easily that most traders get it under their belt within 2 or 3 weeks. And sure, you always have lifetime correspondence with me, but there's nothing else that you need to be supplied with. But in terms of finding out about getting add-ons and downloads and course discounts, I would contact ProTrader Strategies, okay? I hope that answers your question. Mark asks, how is this set up with TradeStation platform? Yes, you can use it in TradeStation. In fact, I use it on TradeStation, so it's extremely simple. I use both of these on a daily basis on TradeStation. I was using them today before today's presentation to trade myself. We'll help, but either way, if you're just new to TradeStation or even another platform, we'll help you set it up so that you can understand exactly how to do that. Then, you'll be able to get it up and running. We'll help you with our tech support, and so that you can have it set up for you. If you already use TradeStation and you're familiar with it, it should be extremely simple to apply. If you're not familiar, we'll help you set it up. Okay, so I use TradeStation myself, so it would be easy to ask me any questions related to that as well. Okay. Yes, I know, Denise, I know you're interested in a trial with the PET-D, but we teach you the education, and as I stated, we can't unlearn that. But please, the PET-D, as I stated, is a proprietary tool. We don't divulge the rules to the PET-D. Why? Because this is probably one of our most important tools. We've had hedge fund managers that are interested in just purchasing this for themselves. That's how powerful this is, because it really captures the short-term trends in any market, any time frame. So we want to just keep this in-house for the moment. So the PET-D is a great tool. Once again, all I can say is that I personally use it. Do a Google search on us. Look at the chat rooms or the boards talking about how people have been successful with this. All I can say is it's not based off of any type of moving average. It's not based off of any type of convoluted indicator. It's simply based off momentum. It's a formula that must be calculated that we've put together in a color bar tool, okay, a color bar algorithm. Okay. Let's see. Abraham is asking, how do I plot strategy number 4 and the PET-D on the same chart at the same time? Well, it's very simple. It depends on what platform you're using. Our tech support can help you with that. But as you saw, I plot them both. All the examples I was showing you in the second half of this presentation plotted strategy number 4 with the PET-D. In other words, you saw the automatic buy or sell indicator, as well as when the bars turned red or green. So it's very simple, but it depends on what platform you have. Let me just go over the major platforms that we use and we have applicable for with the Dynamic Duo. You can use them on, obviously, TradeStation, NinjaTrader. You can apply them to MT4, Metastock, Sierra Charts, and you can also use it with Thinkorswim, but you have to have a few variables included. We can't really use it we have plans in the works now to apply it with Thinkorswim, but for right now we have to do a few editing. You can use the data that Thinkorswim provides on a free NinjaTrader platform. So we'll show you how to get set up with NinjaTrader, and you can just use the same data you're using for Thinkorswim onto your NinjaTrader platform and apply the PET-D and the strategy number 4 combo. It's really simple, and we have people here that can help you apply it. The strategy number 4 discuss setting stops. Oh yes, Shelly, it does. In fact, we give you different options for stops. We give you a standard stop placement as well as more advanced stop placement. Here's the best thing about the Dynamic Duo combo. The Dynamic Duo can also be used as stop placement because it has an uncanny way of telling you when the trend is ending. So if you like to be in trades a lot longer, it will many times change the bars from green to red, and so it tells you exactly when the trend may be ending. And we show you all these different stop placement rules. So yes, we give you numbers of different stop placements. It's an extremely important piece of the puzzle. That was just a rule I didn't share with you today because, once again, I was giving you half of the rules. I didn't want to share with you the stop placement because I might as well give away the whole thing, and that wouldn't be fair. Does this work for day trading? Yes, it does. I just showed with you a 10-minute time frame that happened yesterday in the E-mini. It can work for day trading stocks just as well, and I showed you a intraday chart of the Forex currency pairs. I believe it was the Australian dollar. It works extremely well. I personally use it for day trading, so yes, it doesn't really matter. All that matters is that you are trading the time period that you feel the most comfortable with. This is another thing that people always ask me. They say, well, Steve, what's the best time frame to use this Dynamic Duo on? And what's the best market? And I say this and try not to be, condescending or arrogant, but I say the best time frame and the best market is the one that makes you feel the most comfortable. Because as I stated in the opening statements, no two traders trade alike. Everyone should make their own trading decisions. So you shouldn't be saying, well, Steve trades this daily bar of this market, so I guess I should. Or the guy in the chat room says he trades this way, so I should take those signals. That's a recipe for disaster. You should trade the market and the time frame that you feel comfortable with. All right? I know tons of traders who try to emulate someone, a so-called guru, and try to take their signals and wind up losing, even if they were winning signals. The reason is because they're trading out of their element. They don't feel comfortable. They may be getting in too late. They may be getting out too late or too early. It's not the time frame that makes them feel comfortable. So you have to find what makes you feel comfortable, and you'll get a higher level of consistency. Okay? Let's see here. Let's see. I have been using your 50% move, or I should say 50 simple moving average rules, and it works well. But I don't really understand why you can't offer a trial for the indicator. Other companies do. Well, once again, I think we went over this earlier, Denise. It's basically because we're giving you a lot of great free information and that many people have sold in the past or just given it away. And so you're still a student of ours, but and in good faith, we are presenting you with 38 years of experience and expertise and of trading secrets. And you know this once you receive all the information, all the videos and all the course and all of my mentoring. But we have no idea whether the person on the other end is going to sell it or put it online or going to market it or share it with friends, tons of friends. So that's why we don't want to give any type of refunds. We do this in good faith, and even if we understand if it's not your cup of tea, you can always exchange it for another one of our courses or strategies. Okay. Roger asked, what constitutes a premium member? Well, Roger, that's probably a question better suited for Pro Trader Strategies. I know it's just basically if you're purchasing some type of a college course or things, if you've purchased other courses in the past that meet that certain level. But once again, that's more what Pro Trader Strategies deals with. In terms of education, I can answer the questions along those lines, okay? We've just about reached the end here. We're over an hour, but I want to thank you all for joining. But I want to leave you with this question. We're just about halfway through the year. We're actually over halfway through the year. And ask yourself, has the first half, met your requirements of what you thought you were going to be doing at the very beginning? Because every trader I know of at the beginning of the year sets certain goals. They have certain standards where they want to be by the end. I want to be making so much money. I want to be trading so many markets. I want to be so successful. And I can honestly tell you that the majority of them never reach that goal. You're setting your standards at not even that high, but it's just very difficult because you're given faulty information or things that have no consistency in them. And you're getting the wrong education from someone who actually has no consistency in their techniques. So if you're interested in reaching that level, we're not promising you that you're going to make tons of money. We're not promising you that you're going to retire. But all we're trying to do is instill consistency in your trading, because consistency is what will sustain you. Consistency is what will give you that longevity to trade 20, 30, 40 years down the road. That's all we're trying to instill in you. We're not promising you any dollar amount. But if you have consistency, you'll be successful in terms of our definition because you'll be able to trade. You'll always be in the game. Trust me, I know tons of traders I used to trade with on the floor of the stock exchange who are no longer trading because they've all been blown out. So you need something that's consistent, not something that will make you tons of money one month but then lose it all the next. That in our definition is not what consistent is. So we're trying to get you consistent. We're not teaching systematic trading. Okay, we're not teaching you that. Therefore, there's no stats on win-loss ratios. There's no stats on percentage of winners. There's no stats on worst-case drawdowns because everyone trades differently. We want you and encourage you to trade differently. There are 1,000,001 ways to use our techniques, and we teach you and show you what best suits you. Therefore, nothing can be, systematized because there's just too many variables. So we're really an educational company. As I stated in the beginning, we're all about teaching you so that you can make your own decisions. If you want to get to that level, if you're really serious about turning your trading around, then I invite you to join at this deep discounted rate for the Dynamic Duo, probably our most consistent and successful package to date. So if you're interested, please contact us. There's the information you see listed below, okay? And you can contact Pro Trader Strategies. Remember, I deal with all education, but anything dealing with platforms, anything dealing with technical support, anything dealing with discounts, contact Pro Trader Strategies, and they can fill you in with all of that information, okay? I want to thank you so much for attending today. Thank you so much for sticking through the whole presentation, and I look forward to all of you becoming students of mine and members of Specialist Trading. Thank you so much. I shall see you next time. Bye-bye.